Are we headed for a full-blown war?
Well, I certainly hope not.
Stocks tumbled on Friday as Israel launched new attacks on Iran. A wave of new airstrikes on Iran pushed energy prices higher and caused the Dow Jones to fall about 430 points this morning, or roughly 1%. The S&P dropped nearly 0.5%. The Nasdaq lost 0.5%. Bitcoin is down 2%. Gold spiked 1.3% of the news. Let's evaluate market action, reaction, and what to do next with our next guest, Michael Gayed, portfolio manager, or rather publisher of the Lead Leg Report. Welcome back to the show, Michael. Good to see you as always.
And also portfolio manager of the new ETF, the Free Markets ETF, which is focused on deregulation, but we can talk about that later.
I wanted to let you plug that, so
I appreciate
the title correct. Okay, well, congrats on your new ETF launch. Very timely. We can always appreciate new products in today's fast-changing environment, and I think it's very fitting for what's going on today. But let's talk about news coming out of last night. News that the Iranian Revolutionary Guard headquarters were attacked. New airstrikes on Iran. I mean, Israel and Iran have been going at it for quite some time now. This isn't exactly new, but it's an escalation. The U.S. has responded that they were not involved in the attack, and they have urged Iran not to take any military action against U.S. personnel. Meanwhile, like I mentioned in the introduction, oil is spiking, gold is spiking, Bitcoin's down, and stocks are down. So how are you reading the situation? Something to be concerned about as investors, or should we just brush it off?
Could be. I mean, we saw this pretty big spike in oil. A large part of that's also because oil had some very heavy short positioning before this. So there's a bit of a mechanical short squeeze dynamic that's taking place. But, we saw a lot of this kind of back and forth skirmishes, if you want to call it that. I think it was a year or so ago. And the market would initially get panicky, worried, and then, nothing bigger became of it, and then markets would rebound. And maybe that explains some of the intraday action as we're recording this today, because the initial reaction was fear and then kind of crawled back up. I do wonder, though, if this might be the start of something bigger. And I say that only because it seems like there's a lot of complacency still around geopolitical risk. And I think what seems to be different about the attacks this time around is that Israel's basically doing it over a multi-day period. So we're going to have to wait to now see how Iran responds, presumably with their own multi-day type of attack. So there's always a scenario where it can metastasize into something bigger. And while the market itself is not down in a way that it would suggest that it's worried about it, maybe that's where the underreaction of the marketplace can result in some pain down the line. So remains to be seen. I'll argue that we've been kind of starting to see some signs of risk-off behavior. Gold's, hanging in there despite what looked like somewhat of a top. I think was suggestive of that. So we'll see. We went from it's amazing. I mean, I kind of said it half jokingly, but not jokingly. May, or rather mid-April, I said on X on my Lead Lag report, we're going to go from tariffs to war, and maybe here we are.
Michael, let's talk about which asset classes people should be more invested in or paying attention to in today's. Specifically today's turbulent environment, geopolitical risks rising, potential of war. Where should we go to?
Well, I think on the equity side, it's clear that the play is the energy sector. So I put out that post also yesterday. It's like we could see, if this really gets to be bad, a repeat of 2022, where you had energy really diverge in terms of those stocks relative to the rest of the market. Energy, I'm bullish on independent of the near term, because part of my deregulation thesis, which factors into the FMKT Free Markets ETF, is that deregulation benefits energy anyway, particularly uranium names, which are getting some good traction as we're speaking. But I think if you're going to play the stock side, energy is where you want to probably tilt, right? It's tied to the geopolitical end. Gold clearly responds off of geopolitical risk. I think Bitcoin probably will next, even though it's sold off. I suspect Bitcoin will diverge from the Nasdaq and broader risk-on assets. And you know me, I'm still of the mindset that at some point you're going to get spreads widening. At some point, long-duration treasuries stand alone, and you end up having that flight to safety trade not happening here, because it seems like maybe the initial reaction is that this is going to be inflationary. But if it really gets out of control, it could actually be disinflationary, deflationary, in which case, yes, you'll probably see long-duration treasuries also be a good diversifier. But the things that clearly have been working, gold and energy, I think those are your sort of more obvious plays.
Defense stocks, should we be looking into that right now?
Yeah, so probably much more so on the European side, right? I mean, I think that's sort of those areas have actually done quite well. There's some, as I recall, there's some interesting ETFs that focus on that. So yes, it's like it's the areas which most people are aware of but have never touched or invested in because they've just been so fixated on the Mag 7 plays that there should be some interesting non-correlated behavior against broader S&P 500 exposure that are worth considering like that.
Let's talk about long dated treasuries, 10-year and 30-year. Are we approaching 5% anytime soon, Gayed? Michael? Wow, I just called you Gayed. Did not mean
Everyone calls
that.
me Guy. No, back in the day, everyone said that was like my first. Everyone would say Guy is my first name. No, I like that. It's like MacGyver. All right, so just go with the last name.
You should go with that. It's a little more. It's a little cooler than Michael, I gotta say. But
But
anyway,
yeah, no, Michael's not really. Michael just means gift from God. I mean, that's a good name too. But okay. So I don't remember what the question was.
10-year yield. Are we
10 years,
getting to
right,
10%
10 years,
anytime
okay.
soon? Yeah.
Right. Maybe. So look, as you recall, you were the first one I brought up the whole reverse carry trade thesis to back in August of 2023. And one of the arguments I made to you back then, which I still maintain as a possibility, is that if you have a reverse carry trade, which again, oil could be a catalyst to, part of the thesis with Japan is that oil price in yen is where Japan would panic, and that creates the reverse carry dynamic. Um, if that plays out, then you will see yields rise, treasuries sell off initially. And that may be what's happening here. But then the next wave of that sequence of that reverse carry trade would be yields dropping on the flight to safety into treasuries. So it was always part of the thesis that the first part of that reverse carry trade would actually be with treasuries feeling the pain, then stocks. So I still think that that's a distinct possibility, especially given that Japan's JGB market is not exactly in the best of shapes right now. And it's clear that Japan's got some real serious problems on their financial system side.
Your personal information is probably online right now. Your full name, home address, and phone number sitting on data broker websites that anybody can access or buy. It's uncomfortable, but also avoidable. That's why I use today's sponsor, Delete Me. They remove your private information from hundreds of data broker sites, so it's not just floating out there for anyone to grab. Getting started is simple. Submit your info, and within a week, you'll get a privacy report showing exactly where your data was found and what was removed. Delete Me doesn't stop there, and it continues scanning and deleting your data throughout the year. I trust this tool. It's helped me keep control of something that's easy to lose track of, my personal information. Go to joindeleteme.com/DavidLin, link down below, or scan the QR code here and use the promo code DavidLin at checkout. Get 20% off of all U.S. plans. Today, join Delete Me and take back control of your privacy now. Michael, tell us about your new ETF. Tell us about the strategy there and what you're planning to accomplish.
Yeah, and it's entirely different than the rules-based, highly tactical funds that have to be in long-duration treasuries. It's not a risk-on, risk-off fund by any means. It's meant to be a thematic play on what I do believe is a massive, massive game changer in terms of the entire marketplace and economy, which is deregulation. Trump went from the 2-for-1 deregulatory way of thinking about regulations to 10-for-1 and has already done a lot of measures on the deregulation side, and I think more is coming. So had the idea back in late November and partnered up with 3 other entities. We actually built out a whole AI system that looks at different regulatory measures, looks at executive orders, looks at what Trump's saying, looks at what Besant's saying, synthesizes all this information, screen stocks based on certain fundamental characteristics in high regulation sectors, and then tell the AI which of these companies likely benefit the most from this or that executive order. And then, of course, as an investment committee, we then decide, it doesn't make sense to have this in a portfolio. So it's an interesting mix of primarily mid and small cap stocks because deregulation most benefits those areas. And the fund, FMKT, does also have exposure to Bitcoin and gold because those arguably are the purest expression of deregulation. Now, taking the FMKT fund out of it, if my thesis around deregulation is correct, there's a lot of implications on broader markets. One of those implications is not just a rotation from large to mid and small, but I think you can make an argument that deregulation should make markets more volatile in general. Right? I mean, free markets should be more volatile. Things which are regulated will be more controlled in terms of price discovery. And I would argue that if I'm right about that, we're in a multi-year cycle where you're going to see more scares, which is actually not a bad thing for tactical traders anyway. There will be more opportunities to, potentially actively really outperform. So I do think this is a really big dynamic. I think if deregulation is there, it's going to help small caps. It's going to help everything outside of the tech side. And again, I built a ETF with my partners that's designed to take advantage of that.
Why gold and Bitcoin in particular for expressions of non-centralized assets? I mean, why not a REIT or why not commodities, futures, or anything else?
So wait. The ETF actually does have some REITs that benefit from
Mm.
deregulation too. That's the thing. Deregulation impacts pretty much every sector of the economy, but some more than others. I mean, tech, for example, is relatively low weighting in that FMKT fund. On gold and Bitcoin, I mean, first of all, Bitcoin benefits from deregulation around the financial services side when it comes to crypto, right? And we've seen a lot of that with a pro crypto friendly, even meme coin friendly Trump. And then on the gold side, gold is the purest way of playing a free market in the sense that it's not manipulated by fiat. I mean, it's not. It's the original reserve currency, right? And I think it adds an interesting dimension to sort of the thinking of what real price discovery is. I mean, you can argue a lot of the gold movement here is because of not just fear, but price discovery around what fear should be priced at. And if you're not going to price in treasuries, gold becomes one of the beneficiaries there.
Well, what is your outlook on gold? We're at 34.50 today, right? Nearing $3,500 after yesterday's news on Israel and Iran. What's next for gold?
So I've been loud after having been very bullish since August of 2023 when we first talked about the reverse carry trade that gold would have a big move, and that I said it was gold was sending a warning. I said it repeatedly. About maybe 2.5 months ago, I started turning the other way, warning that I think it transitioned from a flight to safety asset to a FOMO momentum trade. And then you started seeing Barron's put gold on the cover, and it's like all the classic signs of a top. Gold's really just been sideways, right? Now we'll see if this war dynamic with Israel and Iran, causes a breakout of that. But it looks almost like a distribution phase. That's not necessarily a bad thing. I mean, distribution can take a while to play out, and if gold is going through distribution sideways while equities are falling, it still serves obviously a place in a portfolio, which is why, despite my own feelings about gold in the thematic FMKT, it makes sense to have it anyway, even from a technical perspective. But I do believe gold, very long term, probably does continue to trend higher. I just worry about those periods when everybody is talking about it. It's a question of the path and time frame with which you're looking at. The fact that gold's kind of gone sideways, you can argue is a correction in time. If that continues, that'll cool off the speculative fervor that I think was there at the top, and then you can go for another leg higher.
And why, or can the same narrative be applied to Bitcoin?
Yeah. So it kind of goes back to this point about deregulation and volatility are probably connected. It's the freest market of all is Bitcoin, right? Now, it is true that Bitcoin still largely correlates to the Nasdaq, but if things really get out of hand, and given what still seems to be very real risk around Japan and the reverse carry trade, which sparks somewhat of a credit event, which I've been talking about forever, but has not happened yet, obviously. Bitcoin, the one thing that Bitcoin and gold have in common, aside from the free markets dynamic, is that they are both counterparty hedges. Counterparty hedges when you have concerns about getting paid by the counterparty, which is what a credit event effectively is. So I think Bitcoin probably can diverge from the Nasdaq if this is the start of a broader correction. And if that's the case, then that will probably attract some more institutional money because now they'll see that it's not just a levered Nasdaq play, and maybe push that to newer highs.
So it's not a narrative around whether or not uncertainty and war are going to push up Bitcoin, which would be the case for gold. People I
Right.
ask this because people keep saying, "Well, Bitcoin is digital gold." Well, then in theory, shouldn't the same narrative be applied, right?
Yeah, exactly right. Exactly right. And no, I think it's about that counterparty dynamic, the counterparty risk.
Okay. What else are you most bullish on right now, Michael?
You can argue that financials in general look particularly interesting. Again, goes back to deregulation benefiting that part of the equity landscape. So that area is interesting. I think you want to be selective there, and there will be some companies that are more suited for a reduction in rules and regulations than others. But certain financials make sense. And then I actually think the dollar could surprise on the upside. Everyone and their brother's, sister's, boyfriend's roommate is now bearish on the dollar. everyone talks about the dollar going lower. Again, I tend to be a little bit more contrarian in my thinking. It wouldn't surprise me to see the dollar make a comeback, at least for a moment in time. So
Yeah.
if you're be speculative, and try to catch a falling knife, I try to catch the greenback.
By the way, this week's inflation, let's talk about the dollar and inflation and Fed policy, all interrelated. Inflation print came out earlier this week. 2.4%, I believe, was the headline CPI. So slightly higher than the last month's 2.3 on an annualized basis, but on a month-to-month basis, 0.1% increase over May. Not a lot, and certainly less than what was the consensus expectation. Michael, why is it that Trump's tariffs have not fed into the inflation data yet? I've read all sorts of theories online. One of them is that, well, people have been, or importers have been hoarding imports and goods, and it actually hasn't fed through the real economy yet. But I'll get your take.
Yeah, there's probably some truth to that. I think it's also just there's a lag that happens in terms of the cost push inflationary side. And to the extent that different companies are looking at different competitors and saying, we don't want to raise prices now while somebody else is cheaper. It's like everyone. Ideally, it's all these companies would raise prices on similar goods, and all the competitors would do the same at the exact same time. So it kind of normalizes the competitive advantage one otherwise would have by just being earlier, right, or later to raising prices rather. So I don't know. I think it's just going to take some time, and also I think the reality is a lot of companies, because Trump seems to be walking back on tariffs, they're hopeful that it's not going to last. If it's not going to last, you might as well just eat it, right? Just take the hit on your own bottom line for a bit of time, because you also don't want to just raise prices and then drop them right away.
Okay. What happens when Trump takes all tariffs off the table? Let's suppose that were a scenario, right? We get basically a reversal of the Liberation Day. What happens to markets?
I don't think very much. I mean, the market, you could argue that would maybe feel it the most would actually be treasuries, because it seems like that's where you have this almost premium that's happened on the yield side with tariffs. I don't know if it's really going to matter that much for the broader S&P. It might help mid and small caps in particular, because they took the biggest hit with tariffs. But for the broader market, I'm not convinced it's going to matter all that much.
What happened was, after Liberation Day, there was a V-shaped recovery on the markets, partly because Trump took a lot of the tariffs off the table, and then now there's talks between China and the U.S., and they've supposedly reached some sort of trade agreement. And so, is the trade narrative, the trade war narrative, over for now?
I think Trump is very good at knowing when to make noise. So it's over for now until he needs another distraction. I hate to be cynical about it, but I think that's true. Look, I think the reality is that tariffs have not helped Trump's public image. I don't think the big beautiful bill has helped Trump's image because of the impact on the deficit. Again, I go back to deregulation, maybe his last play. So hopefully that is a good tailwind for FMKT. But I don't know. He can do whatever he's going to do. The one thing we know is that he tends to do what he says he's going to do. And what that means is that we shouldn't be surprised to see tariffs be in the headlines for longer than we hope.
Let's talk about your outlook on Fed monetary policy. Next week, FOMC meeting. We're pricing in, well, the markets are pricing in no chance of a cut. When could we expect a cut, if that's still on the table?
I posted on X, I think a month and a half ago, 2 months ago. I said the Fed must do an emergency rate hike and do it to save the system. Dramatic, yes. But I do believe that the Fed probably should hike rates, because the bond market's telling them they should hike rates with the way yields have acted, right? So,
Yeah.
I mean, the bond market is what's ordering the Fed around, not the other way around. So, we'll see. I mean, I don't think the Fed knows exactly what to do. And, candidly, if Trump is really going to replace Powell, then why make any moves now anyway?
I don't think he's replacing him right now. I think
Who knows?
maybe in 2026. I don't even know if he's legally allowed to just replace the Fed chair. We'll let the lawyers in the comment section comment on that.
There's a lot of things that supposedly legally he can't do that's happening. Who knows?
You know what? Let me just go a little off script here. What is something you've been arguing with people on X? Because your X is a source of the arguments you have. It actually kind of is an indicator for what people should be concerned about.
I know, yeah, no. Well, I mean, thankfully, because now that I've realized that a lot of the arguments are bots, and that's why I'm only allowing those I follow to respond. I haven't seen anything sort of controversial, right? At least more recently. I mean, a lot of it's more around sort of, Musk than anything else, right? But I don't know. I don't think there's anything around Trump that's that concerning. And that makes sense because the market has rebounded so strongly off of that low. So everyone's like, well, the market has voted, so why should I disagree with, somebody saying Trump's is ruining the economy? Just look at the equities. Um, but no, I can't really point to anything in particular that's happening. I will say that I don't know if it was staged or not. There's a part of me that thinks it was kind of staged. This back and forth between Musk and Trump that took
Mm.
place. Um,
Yeah, you've been tweeting about that. You said "I told you so" or something like that. After
yeah, well, it's just
they
it
kind of
just seems like it's scripted almost to some extent. And I
why
only
for what reason?
it could be just fun. I hate to say that.
To push down the Tesla stock. I mean, it's like, hey, how can we push prices around? Is that can't be it?
I mean, the
There's
simplest
more
answer is
things.
yeah, but the simplest answer is the right one, maybe. I don't know. The whole thing that whole thing seemed weird. But
Yeah,
the only reason I'm mentioning that is like I put a post. I try to be consistent with my themes, right? It's like I bet they're doing this to mess with us to crash stocks to save bonds. Right? It's like
mm.
let's have these two big billionaires fight it out, free speech versus the government, and make everybody nervous about equities, and then that forces the flight to safety into treasuries. Who knows? But I worry when you have if it was staged, which I don't think is a zero probability. I worry about being in a system where our policymakers are literally acting that way, where they think this is a
Yeah,
game.
yeah. I mean, any longer term implications of markets moving on Twitter wars
Right.
over Trump and powerful billionaires. By the way, supposedly reports are supposedly in that sorry, not Trump, Elon Musk, rugby tackled Scott Bessent, and Scott Bessent hit him back, and now he has a black guy in the White House. I don't know. So
It's
there's that.
WWE in the White House. That's what it is. It's like the
Yeah,
Royal
that's
Rumble.
more entertaining than any reality TV show that's currently airing right now, I have to say.
But you're hitting on exactly so why that's if I'm going to be negative, I'm negative on integrity of the system when you end up having it being a reality TV show.
Yeah. Okay, so bottom line then, how are you allocating cash right now?
So again, it depends on kind of your objectives. I think the energy sector makes the most sense, the largest allocation in the FMKT ETF, because again, it benefits from deregulation as a sector. Some interesting uranium names also, which I think are worth paying attention to because of the executive order around that side of things. That makes sense. Gold, I think, makes sense more on a relative basis, but I don't know how much juice there is to squeeze in that short term performance wise. And then I still think that at some point you're going to get that treasury trade, not investment trade, where treasuries do act as a risk off asset again. And I've been wrong and waiting and waiting and waiting, and it impacts three of my funds, not my free markets ETF, but again, I think it makes sense that you're going to see the most hated asset at some point become the most loved when it's too late, which is after it's already moved.
You tweeted actually on May 9th. We are about to go from tariffs to war.
Yeah, that's the reference I
Few
was.
understand this. What are you referencing? Surely you can't be talking about what happened yesterday with Iran and Israel. Were you?
I mean, I'm pretty good at predicting the future. I just look at all the thousands of posts where I say random stuff. No, when I said that, I said that because I'm a cynic. I do believe that they'd have to break equities to get rates down. I think the speed with which it happened during the tariff tantrum was too aggressive because that was close to like a GFC type of moment. We were at the people don't realize that week where the low happened. That was like the Hank Paulson moment because we were at a juncture where there were going to legitimately be a lot of margin calls that week, which is why
Hmm.
Trump on the Mondays, floated to the press that they'll pause tariffs by 9 months or whatever the number was, and then to see what the market reaction would be. Market surged on it. Then the White House walked it back. Oh, we didn't say that. That wasn't us. And then they actually said it on Wednesday. They were testing the market reaction because you had to prevent that cataclysmic domino of margin calls that week. And that's what marked the low when Trump came out and he had that huge move. I was on the cruise and saying he was going to see the biggest interest rate turnaround in history, and it happened. But I still think you need to have markets go down to force money into treasuries. It just has to be a little bit more gradual, not like that way, like the tariffs, right? Where it threatens the system. And war could be a way to do that.
What was the investment implication of that prediction?
Well, that if again, if you're putting like your conspiracy cynic hat on, that they would be. It's like that old saying from, I forget his name. I know people on X will tell me about it, of Gerald Salente. It's like when all else fails, they take it to war. It's like that type of a way of thinking about it. When all else fails in terms of forcing stocks down to push money into treasuries, war is the answer.
I'll just ask you point blank from a final question then. Are we headed for a full blown war?
Well, I certainly hope not. Nobody
Hmm.
should ever. I I don't know. All I know is that you have to always consider the low probability event that could change everything. That doesn't mean you have to act on it, but you have to at least think about it. It's scenario analysis. Like, okay, so if we are headed for war, this is how one should think about their portfolio, think about how one should think about living life and how to interact with people and stuff. So I certainly hope not, but it's not a zero probability, right? So maybe this does spark into something bigger, which is why this could be interesting in the sense of the way the market has reacted. The market has reacted like it's going to be like every other one of these kind of scares where it's scary initially and then there's no war and it,
Hmm.
it pulls back. But and that's valid every single time until the one time it actually is the start of a bigger war. But because now we're
Yes.
trained to think it doesn't matter very much, nobody really responds and reacts to it. And then if it actually is a big thing, then it's a real problem.
Great. I hope we don't get a real war either. That would be bad. But as investors or people interested in the markets, we do need to be cognizant of these tail risk probabilities. Anyway, thanks for coming on. I know you're busy, so I really appreciate your time. Where can we follow you and get your updates and learn more about your new ETF?
Yeah, at Lead Lag Report on the social media side, the Substack leadlagreport.substack.com, and then the deregulation ETF, the free markets ETF ticker is FMKT, free markets, uh, uh, available on all platforms pretty much, and thankfully getting some good traction and attention, and so far performance is pretty solid. So I appreciate you, David,
Yes.
as always.
Well, I appreciate you, Michael. We appreciate you. So thanks for coming on. Good luck with the launch. Well, it already launched, but good luck with the next couple weeks with the launch, and we'll get you on very soon for another update. So stay tuned for that. Thank you for watching. I'm David Lin. Don't forget to like and subscribe.